themselves upside down, owing more on their new house than it was worth. It's not exactly clear how a mortgage broker was able to qualify Phil Fontenot and his wife Kim Monroe for this $436,000 house, from which they run a small daycare center. The couple say they wanted to move to a better neighborhood. When the broker approached them, the Fontenots told her that they could afford at most $2,500 a month. But the monthly payment on the adjustable rate mortgage she gave them quickly jumped to $4,200 a month.
Did you understand any of this? Did you understand what was going on?
No, not really. Not much of it.
Did you have a lawyer look at it or anything?
No, I didn't.
But you knew this was a big decision, right? You were borrowing hundreds of thousands of dollars.
I didn't really look at it like that.
How did you look at it?
I looked at it as far as my family. I can get my family off of this block.
And that we could pay the payments that she said that we could pay. But after it was all said and done, and the paperwork was drawn up, it was something different.
Matt and Stephanie Valdez say they knew exactly what they were doing when they bought this small two-bedroom house for $355,000. They could afford the initial payments and planned to refinance the mortgage before the interest rate jumped to 11%. But they couldn't do it because the value of the house had fallen below what they owed on the mortgage. They say they can afford the higher payments, but see no point in making them.
You're saying essentially that you're going to stop making payments on it. You're just going to let it go into foreclosure.
You know, that's the only advice we've gotten so far is walk away from the home. We don't want to do that to our credit. Why can't our mortgage company work with us?
You see the tire on that car parked in front is flat.
There is a certain cold logic to just walking away.
So that would lead me to believe there is most likely not an occupant in the property.
And Kevin Moran, the real estate agent who gave us the tour of foreclosed houses in the Weston Ranch subdivision, says it's happening every day. They were never really invested. Most of them who lost their houses didn't lose any money because they never put any money down.
They took $60,000 out of the house.
Correct.
Though their credit is damaged and they could face legal action in some circumstances, they got to live in a new house for a couple of years, and some of them even managed to take some money out with home equity loans or by refinancing.
Nobody seems to be saying, look, I made a contract with you, I borrowed money from you, I'm going to do everything I can to pay off that obligation. People just seem to be saying, look, take the house, goodbye, I'm leaving.
Yeah.
There was a time, I think, when people felt really bad about not paying off a debt.
In those days, loans were made by your local banker or building and loan association or savings and loan. They were guys you saw in the grocery store. They were on the Little League team with you, the PTA, the school. And I think as mortgages became securitized and Wall Street became involved, they became very transactional, and there was no relationship built with the borrower and the lender. And I think that makes it easier for someone to see it as an anonymous party at the other end of the transaction and just walk away from it.
Turns out that if you give people free money, they will take it without really worrying too much about giving it back, because after all, it's free.
Greed.
Greed, sure. Greed on both sides of the table.
What do you mean?
Lenders and borrowers.
So everybody was gaming the system.
Everyone was gaming the system.
How many are close to default?
That's not to suggest that there aren't huge losers in all of this and much suffering on the part of hardworking people who have lost their dream.
Are you here for counseling, ma'am?
Home values are plummeting, and the housing sector, one of the largest and most vital parts of the American economy, has ground to a standstill, pushing the country towards recession.
Okay, try not to cry. We're gonna get you some assistance.
Wall Street and foreign investors are now stuck with millions of distressed properties, the unsold condos in Miami, the unfinished apartments on the Vegas Strip, the developments in Atlanta that are sitting idle, and the thousands of stucco houses in Stockton. Not even Kevin Moran, who has copies of the foreclosed mortgages, can figure out exactly who owns them.
That's the fascinating question of this entire debacle we're in. Mortgages are sold in mortgage-backed securities, so they're pooled. I have seen anything from some of the largest financial institutions in the country, and then you'll see Deutsche Bank and a series of numbers and letters and the reference to the mortgage pool the mortgage is in.
The pools are part and parcel of those high-yield mortgage-backed securities everyone gobbled up a few years ago and are now stuck in the windpipe of the world's financial system. No one wants to buy them. No one can sell them.
Bonds marked AAA are now quoted at 50 cents on the dollar, 40 cents on the dollar, some of them much less.
How much on the dollar, do you think?
Some of them are worth nothing on the dollar. Nothing on the dollar. You know, it is about the worst thing that's happened to Wall Street in a very long time.
How many of these securities are out there?
In a round number, you can say $1 trillion with a T plus.
And who owns them? Who bought them?
You know, state pension funds, hedge funds bought them.
Banks.
Yeah, right. Foreign central banks own some of these things, if you please. You know, so the ownership is very widely dispersed, which accounts for the high level of anxiety, the general anxiety.
Good morning, everybody. We're ready to go on the repo home tour.
There's already a 2-year supply of properties on the market in Stockton and so many foreclosures that real estate agent Cesar Diaz decided to start the repo bus to take bargain hunters and bottom feeders on a weekly tour to see some of them. He got the idea from taking the Hollywood tour of the stars.
We have 2 shuttle buses.
The day we went along, there were 2 busloads checking out houses that are now up to 70% cheaper than they were when the crisis began.
This property is semi-new. It was previously listed at $307, I believe. They reduced it a little bit.
The consensus seemed to be that prices are going to drop still further. Not particularly encouraging news for the past 2 chairmen of the Federal Reserve Board.
Alan Greenspan and his successor, Ben Bernanke, would say over and over that it's contained, the problem's contained. It turns out it is contained only on planet Earth. That's it.
100 of the world's biggest financial institutions are now on the hook for a reported total of $379 billion in bad debt, and counting. As for Stockton, it remains the nation's foreclosure capital, with more than 6,000 houses currently in default or foreclosure.